So today is definitely going to be a longer video than yesterday because my voice is actually feeling much better, suffering from terrible allergies right now. So many other people out there. I spoke to one of my friends in a different part of the country here in America. He's actually undergoing some severe sinus infections right now. So, oh man, it's definitely a brutal summer for some people, right? So we have a lot to dive into for today's episode. I may or may not get around to show my public profile on this YouTube channel that I pretty much created for buying and selling stocks of what I'm personally doing. But I do want to talk about the inflation report that came out this morning, PPI. Right now, it's 11:20 a.m. Eastern Standard Time. Then I want to get into another survey that I love talking about, the AI Investor Sentiment Survey. Very much driven around algos in the market. I really want to talk about this. Then I pretty much want to wrap it up talking about pretty much the new projection for a rate hike in the foreseeable future by the Federal Reserve. I do want to talk about that. Then I really want to talk about some stocks, and if I ramble on for too long, may or may not get around to show my public profile, but you can definitely check it out in a couple of videos ago. Welcome if you are new. I put out videos on this YouTube channel Monday through Friday. Saturday is free educational content. I do have a public profile challenge that I'm doing on this YouTube channel publicly. So for those of you that have seen my content before, you probably are very much aware of it. I keep things very much real talk. So grab some water. Cheers. I already drank some morning coffee. Grab some water, some coffee. Maybe some of you all watching this video very much later, grab a beer, grab whatever, right? Maybe even a joint, depending where you all are at. And let's dive into it. Okay, so PPI. Yesterday, CPI. CPI came in very good with expectations. PPI, producer prices were unchanged. Hey, pretty much, right? So, is it good? Is it bad? Well, the market is very much green right now, so the market is very much loving it. Obviously, if it came in on a little hotter side, we might see a little wobbly. Now, yesterday, I did talk about how we had a very nice push higher on the Qs and many other stocks. Then we basically faded away. If you ever hear the term very much faded away, it basically is talking about a rally that very much happens very quickly, and then it basically pretty much goes back down. That's called very much faded away. So yesterday was a very much faded away, and the reason being is because the expectation of the PPI today was actually going to be a little elevated. Now that we came in very much unchanged, that is honestly not like bad at all. But here's a caveat. All these reports pretty much repeat every month, and we're just going to be waiting next month for the next reports, right? I mean, hey, if you're going to be in the stock market, you got to be paying attention to government data, because government data can set you up for insane buying opportunities. Also, insane selling opportunities too, where you could have stocks that run up very, very quickly that maybe you are invested in and you want to take some profits, or you are trading a stock and you're like, hey, you know, I bought this stock maybe a couple weeks ago, couple months ago. I'm up by like a very large amount. And yeah, I'm going to, you know, take my wins and go elsewhere. And hey, you know, you got to stick to your strategy. If that's your strategy, that's your strategy. But government data is non-negotiable in my opinion. You got to go ahead and get into a cycle of reading government data. And by all means, you can use AI. I use AI like every single friggin' day to very much pull data for me. For some reason, the website that I typically get the data from is actually lagging right now. So that's the reason why I pretty much just ask Google AI. But I did verify it by other reports. So yeah, I mean, hey, it's ultimately very much neutral. However, we do have another report coming out next week, the PCE. So PCE is the third inflation report that we're definitely going to be looking at. And yeah, it's going to be once again pretty much all eyes on that report. if that report comes in line or rather below expectations, this market definitely does want to break out. And I'll definitely be going over the charts here momentarily. So, I love using this survey. I've talked about this survey a lot. This is the AI Investor Sentiment Survey. I'll go ahead and drop this link down below. If you are new to the market, understand that everything is based on algos. Everything moves. So if you're new to the market, right? And let's say you are watching a stock when earnings gets dropped. Every quarter, a publicly traded company produces earnings. It is a requirement. Otherwise, they could face delisting. They must inform investors, shareholders, the public about their quarterly earnings. So let's say a company releases earnings at 4 p.m. Eastern Standard Time, right? Boom. Earnings drops, gets released, and the earnings are beating all expectations. And you're watching the stock price in a matter of 1 minute go, boom, very much higher, right? That is all algos and bots pretty much buying up the stock, causing it to go higher. Yes, there are people legitimately FOMOing on in to that stock and buying it as well too. But the reason why stocks move like that, they go up and down insanely like it, is because of algos. And on the flip side, manipulation does actually happen out there. But we're in a market where it's essentially, you're at the mercy of algos. Now, I really do like this AI Investor Sentiment survey, because this is primarily driven by a lot of algos. So you kind of really get to see what the algos are very much like, in a way, thinking per se. And if you go back to Liberation Day 1 year ago, actually more than 1 year ago, it was really bad. Oh yeah, this survey was like 52%. Oh, it was really bad. So what we're basically seeing right now is very much, obviously, a little less bullish than very much like the week prior. And this comes out every single Wednesday. So if you ever want to check this stuff out, I definitely check it out every single Wednesday. I don't talk about it every single week, but I probably really much should be talking about it a little more. And I really feel that this survey is just a little more accurate than a lot of other surveys out there, in my opinion. But what we're seeing right now is still the amount of bullish sentiment is not anything overly insane. Now, understand that hypothetically, if the market were to move to, let's say, 52%, bearish, you're talking about a Liberation Day crash, obviously, that would be considered oversold, because you can't stay. One thing that I've learned in the market is that nothing is forever. You cannot stay oversold forever. It doesn't happen, okay? Stocks just can't stay. I mean, unless, there's going to be a crash that is the crash of all crashes. But, I mean, we can go back in history here. We can go back to the Great Depression. We can go back to the Great Inflation during the 70s. We can go to the Great crash. I believe it was either the Black Friday crash during 1987. Don't quote me on that. Or the Monday super crash. We can also go down to the dot-com bubble crash, the 9/11 crash. We can go down to the Great Financial Crisis, 2007, 8, and 9. The Rona crash as well. 2018 sell-off. Rona, 2022. Nothing stays down forever, okay? But what this allows you to do, for me personally, is that hypothetically, if something is 52% bearish, that means stocks are free-falling, and for me, I'm going to be buying the friggin' dip. However, on the flip side, understand that if something is super, super, super bullish here, where let's say if we have a survey come out and the bullish sentiment is 52%, we're going to be in overbought territory. So what I did during 2024 It was very much legendary, I would say, in my own personal life. 2024, the stock market was beyond unpopular until the presidential election. Oh, yes, I was actually still drinking alcohol back in 2024, and I was at bars, I was at nightclubs, I was very much at restaurants, and all throughout, up until, I want to say, legitimately the election, I'm a very social human being. In case you haven't really caught on here, I can definitely talk soberly, and if I were to be drunk, oh man, I could talk theoretically all night and all day long. But every single person that I was basically pretty much talking about, randomly about, hey, are you buying any stocks? Do you think about, stocks at all? We got to wait till the election. We have to wait till the election. We have to wait till the election, right? What was I doing all throughout 2024? I was buying stock hand over fist, left and right. That's honestly when I got invested into SoFi. February 2nd, 2024. Many other stocks as well, too. So I was buying during the times when the market was just not at all popular during 2024. Now, was there people making, life-changing money in 2024? Of course they were. They were in the market. Now, as for me, I was loading the boat on very unpopular names like SoFi. I even was loading the boat on Tesla. I was very much buying Tesla. I believe shares in the $200 range. It was unbelievable. Once the election happened, that's when people FOMO'd on in. And for me personally, that's when I started taking a lot of profits. Very much the end of 2024, early 2025 before Liberation Day. So the AI investor sentiment survey can work in both favors. Hypothetically, if we are 52% bullish, like for me personally, what I would be doing is I would be looking at all my profile. I would be looking at all my positions, and I would be saying, okay, this position is really overbought. It's trading way too high. I want to take some shares off the table, and I want to take some profits. Your trade position, and you've ran up into nosebleed territory, I'm going to go ahead and sell my trade position. So you can go ahead and use this type of sentiment in your favor, but you got to understand how to read it, and you also have to be disciplined to not FOMO on in the wrong time period, okay? If something is 52% bullish and everyone is going crazy, the stock market is amazing, everyone's making money, everyone is doing great, you got to be buying stocks. You got to be buying stocks, right? Chances are the party is close to crashing. And that's where being disciplined, and to become disciplined, it just takes time. I've been in this market for going on almost like 6.5, it's going to be 7 years by the time I know it, but it takes a while and it takes time. But when you become disciplined, and when you see what everyone is doing, nobody's buying stocks, these stocks are beaten down. Yeah, I'm going to be buying some stocks. Wow, everyone's buying stocks and stocks have ran up insanely high. I'm going to take some chips off the table and I'm going to be building cash. That's essentially what I did during 2024, and it worked out in my favor significantly. Now, could it also have not worked out in my favor? Sure. Anything's possible at all. So I definitely will be talking a lot more about the AI investment survey, but in my opinion, right now in the stock market, we are very much on I'm a long-term bull. Long-term bull always on America. I'm a veteran. I'm a patriot. I love America. Love my country. I'm always an American bull. Short-term, I could be bearish, I could be neutral, and I could be bullish. Short term, earlier this year, I was bearish. That's why I was buying so much stock. Right now, I am very much on the neutral, bullish avenue. I'm not on short term. I'm personally not the all aspect to the bullish side. Right now, we still have a lot of uncertainty in the Middle East, But the AI investment survey, I mean, for the last like couple weeks now, we're in the 30% range. In order to really become very much in a FOMO-y market to the upside, where you're talking about all stocks in every sector, not just like big tech. I'm talking about the staple companies, pretty much like small caps, rock and rolling. We got to get the AI investor sentiment survey closer to 40%. So next week, if it comes out like 37% again, the stock market's going to be very, very runny. And then we get another survey coming out where it's like a 40%. You're going to see a lot of small cap companies. They're going to be, oh yeah, they're going to be moving. They're going to be moving very, very quickly. And then you're above 40%. You're going to be rock and rolling. And hypothetically, if we are bullish on a 50% level, oh yeah, you know, we're going to be in a very FOMO-y melt up market. Understand though, nothing stays like that forever. You gotta remember. That's how you play this game. You play this game where it's pretty much like it's pretty. I don't really want to say this, but it's very factual. It's pretty much like opposite day. Hey, is everyone, you know, FOMOing on into the market and buying stocks? It's very green, right? On green days, I don't get excited, and on green days, I typically don't buy. I buy on bloody red days. Nobody wants to do anything with stock market. Go and play golf. No! You should be playing golf on the green days. On the red days, you should be buying stock hand over fist. Like left and right, you should be buying stock. It doesn't matter if you're an investor, trader, whatever. It's on the blood. The red is going to make you life-changing money. It really will. And if you don't believe me, hey, go research OG investors like Warren Buffett. Warren Buffett, Berkshire Hathaway, they just started to be buying a lot of stock now, but they were building a cash position for the last couple years. But I mean, still, Warren Buffett, oh man, like the times where Warren Buffett is bought when nobody has wanted to buy, just please go and do your due diligence because you would be shocked. Very much shocked. Okay, so Fed Watch now, right? So 34 days away to September's FOMC meetings. Obviously, we don't have one in August. Bada bing, bada boom, bada bang, baby. Look at this. Wow. So I showed this, I believe, a last couple videos of mine, and we had a 45% chance of a rate hike. Look how quick this moves. Look how quick this moves. Back in December last year, I was putting out a lot of content on this channel, and we had a 25% chance of getting a quarter basis point rate cut. We got a rate cut. Trying to keep this channel really PG, but sometimes I can't. This is all bullshit. It straight up really is. This can change snap of a fingers in a second. And this is also one of the reasons why I personally don't have any long-term options, short-term options right now, is because stuff is just very... me personally, I'd rather just be buying stock. I'd rather be building trade positions, whether it's a short-term trade position under 1 year, or even maybe under 6 months. I'd rather just be adding to my long positions, such as the next 2 to 3 years, or even close to maybe 10 years. So the thing about it is that this stuff can change. Like if we go ahead and come in line or below on the PCE report next week, we could very much see, hey, we're going to be moving closer to maybe a hold. No rate hike. No rate hike at all. What do I personally believe? I don't believe that a rate hike is going to happen. Call me a little crazy, but I just really don't. And why do I believe that? I really do believe that there's a lot of politics at play. I absolutely despise talking about politics, but I really do believe that politics are going to be at play for the midterms. And I do believe that obviously the Republican Party they want to push out headlines to so many people that are obviously not like in the stock market. Because if you're in the stock market, I mean, like you're looking at what is happening. And what is happening is that the stock market is going through a volatile swing. People are getting murdered in short-term positions because they're like, hey, do I place a call? Do I place a put? You know what? And then they just, it's utterly. Do we have peace in the Middle East? Do we not have peace in the Middle East? Do we have peace? Do we not? Back and forth, back and forth. What do I personally see? I personally see that the Middle East, hopefully, and this is a dangerous thing to really be saying because hope is a dangerous aspect. But I really do hope that the Middle East is wrapped up relatively soon. And once that happens, oil should drastically free fall. Kevin Walsh, he very much is a Republican. Okay, you can look up the guy's history. He's actually very close to the Trump family. And let's go ahead and face reality. Donald Trump, like the president of America, is not going to nominate a Fed governor that is not going to try to implement his policy, okay? So, like, give me a break. It's politics. I really feel that the Republican Party really wants to maybe drag this on a little bit and probably either a couple months before midterms. So we still have a couple, we still have, like, honestly, about a month, maybe month and a half to really go. But probably around the end of September, that's when a lot of stuff is going to come out. A lot of stuff at the end of September is going to be coming around the corner, and it's going to come out where, hey, we have a peace deal in the Middle East. We have oil very much down. Gas prices are going down. Woohoo, right? Vote Republican, right? Hypothetically, if the Democrats were in power, vote Democrat. It's all politics. It really is. It is all friggin' politics when it comes down to it. I really feel that we're not going to be getting any rate hikes this year. I don't. Why is that? Because the inflation we're undergoing is caused by a geopolitical issue. Take away the geopolitical issue, the problem of macroeconomics goes away. Macroeconomics, inflation, deflation, microeconomics, supply and demand. We're not in a supply and demand issue. We're in a macro environment. Monetary, whenever you hear macro, always think by money, how it affects money. Inflation, deflation affects money. So we're in a macro environment. Therefore, the money supply is being affected by inflation, deflation. So I really feel like, no, I don't believe this. I don't believe that we're going to be getting a bunch of rate hikes. I think, honestly, that all this stuff is dead wrong. Do I believe that we're going to be getting rate cuts anytime soon? Probably not this year, but I don't believe we're going to be getting any rate hikes this year too. I really feel the Fed is going to be cutting rates next year. Next year, I feel the Fed is going to be cutting rates drastically. Okay? But I personally don't believe any of this stuff. Now, what am I personally doing to very much aligning myself to my vision? Well, here's the reality. One, I have a lot of long-term positions. I'm invested in the stock market. Hypothetically, if we go ahead and get rate hikes for whatever reason and the market goes down, hey, I'll be buying stock. Hypothetically, if we get no rate hikes and a lot of my trade positions go very much higher, I take profits and I continue buying stock. I personally don't give a shit if we get rate cuts or rate hikes because I buy stock regardless. And I highly encourage anyone out there to very much form a strategy where you are always buying stocks. There are always discounts. Stocks, the market is going down. There are discounts everywhere. The market's going up to new levels. There's still discounts everywhere. There are. I do not have enough money right now to buy every single discounted stock. There are discounted stocks everywhere. Everywhere there are discounted stocks. I don't have enough. I can't produce enough money. Okay, like it's crazy. The amount of discounts out there are unbelievable. Okay, if you are a cryptocurrency bull, cryptocurrency is in the gutter. Hey, you're a bull in cryptocurrency? Yeah, you have an entire cryptocurrency market in the gutter. What about software stocks are still being down very much? And then on the flip side, you have staple companies, consumer-driven companies, still very much two consumer-driven companies. One very much on my watch list, which is Hims. There's a lot of drama around Hims, but still, like there are so many discounts out there. It's unbelievable. So if we get no rate hikes and we also get no rate cuts, or if we do get a rate hike, I personally, I don't care. I'm just going to be buying more stock and continuing to build positions. So at the end of the day, to really sum up today's video, is build a strategy around if good stuff happens or bad stuff happens, but it's all about staying in the market. Unfortunately, there have been people that come into the market for a little bit, they don't like what they see, and they leave. That is something that you don't have to be a financial advisor to tell someone that is like utterly dead wrong. If you're going to be in the market, you got to be in the market. You can't, walk away from the market. I'm not talking about going on vacation for like 1 or 2 weeks. I'm talking about selling all your stocks and saying, deuces, I'll wait the next couple years, right? No, okay? No. Let's go ahead and say, for people that got out of the market after December 21st, right? Okay, you got out of the market out of December 21st, right? Okay, sure. Let's say you stayed out of the market December 21st. Well, if you bought the entire market all throughout 2022 like I did, you pretty much set yourself up for an epic rally. If you were buying stocks during 2022, my gosh, like you set yourself up for an awesome position here. People sold everything in 2021 and they re-entered the market maybe 2020, 23, 24. Some maybe waited for Donald Trump to come back. Well, I hate breaking to you, but Donald Trump came back and you had a nasty day. How many people left the stock market during Liberation Day? Loads of people. It's just so super important to understand that you must be in the market. Depending on whatever you do, you could very much be a trader, only be a trader. You could very much be just an investor. You could be a hybrid, basically pretty much like me. But it's very important that if you're going to be in the market, you got to be in the market. So on a closing note, stay motivated, everyone. Obviously, the report for today was very good, and we got to really see what continues happening, right? All right, tomorrow I'll get around to talking about my individual stocks, my public profile. Stay tuned for more content, and later.